I really can't believe that this is happening to us right now. You see, today, crypto markets and global financial markets got hit with the worst piece of news that we have seen since the COVID crash back at the start of 2020. And yet right now, the Bitcoin price is nearly back towards $80,000. The S&P 500 is back in the green. What on earth is going on? Some people are saying it's because Donald Trump has given China another 90 days before he imposes the tariffs on them. Some people are saying it's because the Federal Reserve is starting to look at cutting rates and having an emergency meeting later on today. Others are giving other reasons. But as far as I'm concerned, it's all because of this chart. This chart over the past 3 years has accurately predicted within a few weeks every single major Bitcoin and altcoin push towards the upside. Within a few weeks of this signal flashing, we have seen a major recovery in the markets. And right now, we've been seeing this signal over the past few weeks. But we still have time for this to happen. And in this video, I'm going to explain why China, now saying that they're going to start printing money again, is going to have a hugely positive impact on this particular chart. So without further ado, do me a favor, hit that like button, and let's find out why you shouldn't be panicking. Now guys, I'm going to be honest. Seeing the markets get hit by yet another dip kind of surprised me. I thought that we'd already priced this in back on Friday, and I guess people were just speculating on the fact that when the US stock market opened, it could be down, so everyone panicked. And really right now we're seeing the stock market actually going up, and now everyone's not panicking anymore. So why has everyone stopped panicking? Well, because the news is already out. Everyone already realized that the worst has already pretty much happened, and that's why the volatility index is now sitting at this massive level up here. We've seen the stock market seeing a massive shakeout over the past few days. This shakeout has been the worst we've seen since back on August the 5th of last year, which, if you remember rightly, was the local bottom for Bitcoin and the altcoins at that time. From there, we basically rallied all the way up towards December. Before that, this was the March crash for COVID back in 2020. And if you go back through the list, all of these major spikes mark the local bottoms for the stock market and crypto as well. So it's pretty positive to see now the markets are showing some signs of recovery, because the worst of the tariff news and drama around tariffs has now been seen. And let me confirm that for you. The S&P 500 is now erasing losses after investors are rushing to buy the tariff-driven dip. The Federal Reserve has announced that they're about to have an emergency meeting to discuss the potential for interest rate cuts, something that Donald Trump, the President of the United States, has been desperate to try and get the Federal Reserve to do, because as soon as the Federal Reserve do that, he is able to start growing his economy. This has all been one big game, and he's basically been getting away with it right now, despite the fact it has huge impact on the rest of the world. The fact that he's now starting to ease off on China shows that he's really having a bit of an intent to ease off on everyone. This was just coming in very strong, and ultimately this was a power play, and now we're starting to see him ease off and playing the nice guy once more. But it's had the results that we as crypto investors wanted. That's right. You might not want to be feeling that pain and worry that you felt right now because the markets have been down, but actually, you know what? The thing that really drives these crypto markets is none other than M2, as well as a bit of global liquidity. And right now, because the dollar's been weakening, because Donald Trump has been turning the screw on various economies around the world, countries with monster economies like China are discussing accelerating stimulus. They are pumping money into the economy once more. Forget about the rate cuts in the US. All the other countries around the world right now are turning on their money printers, and the US will be the final one to do it and blow this thing up bigger than you've probably ever seen before. So despite the fact that the markets are full of fear right now, every YouTuber and his dog is making some sort of fear-mongering thumbnail, which I've decided not to do today, because I just decided that you don't need that much stress in your life for me to just make another worrying thumbnail. Now guys, to this. This is so important right now. I've been talking about this over the past few weeks, and people are like, well, it's not happened yet, so it's obviously not true. It doesn't count. Well, guys, every single time we've had one of these signals, within a 1 to 3 week period, we've always seen the market pushing higher. Okay, every single time we see this black line have a sudden push higher, Bitcoin suddenly reacts. This one down here, Bitcoin went on the first week. This one up here, Bitcoin reacted 3 weeks later. This one up here, it took 2 weeks for Bitcoin to go up. This one up here, right now, we are about 2 weeks after that first signal flashing on this chart. So what on earth is it, and why is it driving the markets? Well, you see, this is global M2. This is not global liquidity. Anyone who tells you that global liquidity is what's driving the crypto markets, they're not telling you the truth. Global M2 isn't the same as liquidity. The liquidity in the markets is effectively like the potential for there to be money in the markets. M2 is money in people's pockets ready to spend their money. And you might not feel that wealthy right now because the crypto markets have been squeezing you, but actually every one of these global M2s has been pumping towards the upside. This one here is the Europe M2, and as you can see, it's been pumping back towards the upside. This one here is the Japan M2, and as you can see, it's been rising towards the upside, not quite so aggressively, but still having some good moves. This one here is China, and this one here is the US. Now, let me just give you an example to explain the difference between global M2 and global liquidity index, because it's so important, because I'm going to explain to you why the global M2, which is going higher, is the reason we're going to see crypto pushing up sooner rather than later. And if you weren't aware already, this front runs crypto by around 70 to 77 days. This is on a weekly chart. I've added this indicator. I've delayed it by 10 weeks. You can add it to 11 weeks. I know some people are saying 15 weeks. At the end of the day, whatever happens and whatever you believe, the market goes up. I think you can all agree with me that the market goes up because the M2 is driving it. Now, imagine a shopping mall full of people. One of these shopping malls is in a country with a high liquidity index. That means that all the people in the mall have the ability to go and take out big mortgages on their homes. Does that mean that they're necessarily going to go and buy lots of things? Ask yourself that question. Well, it means they have the potential to buy lots of things, but they might not do that. That's how Global Liquidity Index basically affects crypto. It means there's a potential for various companies around the world and various institutions to be able to get funds to be investing, but might not do that. On the flip side of things, imagine a mall full of people with a high M2. This means that they've got lots of money in their pockets compared to the people who have the potential to be able to get the money. These people in the mall are probably more than likely going to be out there buying more items in the mall. That should make sense to you. Just because you can get a big mortgage doesn't mean that you go and spend loads of money. So you see, M2 is incredibly important compared to the Global Liquidity Index. And yes, the rate cuts from the US is going to be beneficial for M2, but not in the way you think. You see, rate cuts in the US is going to be directly impacting the Global Liquidity Index, but it's also going to be impacting the US dollar. And as the dollar falls, guess what? Other countries around the world can start to print money. And that's where the M2 really starts to enter the markets. Rather from the US, it's really coming in from lots of other countries around the world. And you can see Donald Trump is now telling you the oil prices are down, the interest rates are down, the Fed should cut rates. He's saying that food prices are down. There's no inflation going on. This has been abused by the US. Blah, 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 is making the markets really harder. I've also raised the tariffs, and he goes on to basically say why he's raised the tariffs because he's so great and yada, yada. But really what he's trying to do is to get the Fed to reduce interest rates so that Donald Trump can come and be a legend and tell everyone how good he's been by crashing the markets at the beginning of his run rather than at the end. Because every other government comes in straight away and cuts rates. They get to cut rates straight away because the Fed cuts rates because inflation's low. Donald Trump hasn't had that, and he's had to therefore manufacture a way to be able to get the Fed to cut rates so he can grow his economy and can be seen as the president that everyone wants. But right now, it doesn't look that good. I appreciate that. And for everyone out there who's like, Donald Trump's an idiot, he doesn't know what he's doing, I'm happy enough to admit that Donald Trump, whether you respect the man or not, has a lot of money. And he's definitely got a team of people far more intellectually capable and far more aware of the financial system, dare I say it, than me for sure, and probably you as well. So while this might seem absolutely crazy and has baffled people out there, I wouldn't be surprised if this is actually a pretty smart, genius move that turns out to be much better than many people are out there thinking. Either way, it doesn't matter. It has had a momentary short-term effect on the Bitcoin price, which is why you've seen it having this little dip here. But really, it's not that bad. And I know people are going to be like, this guy doesn't know what he's talking about. We haven't seen this pump happen yet. We should be seeing it. Look, every single time we see this rally, we see Bitcoin pumping towards the upside. It doesn't happen every single time on the exact week. Sometimes it takes 1 week. Sometimes it takes 2 weeks. Sometimes it takes 3 weeks. But inevitably, this will turn around. And if you don't think this is useful or not making sense, just let me show you something a moment. Back in the last bull market, this was the global M2. You can see it carries on all the way until around July of 2022. And yet the Bitcoin price fell off the face of a cliff around the 15th of November. So how the hell can we use this? Why is this useful for us if it doesn't predict the end of the bull market? Well, the global M2 doesn't predict the end of the bull market, but instead of that, some other countries do. Now, if you add this indicator, which is M2 money shift for Bitcoin, and you go through and you change the input to just being one of these, you can see on an individual basis which one of these is driving the market at any time. Because different ones of these drive the markets at different times, which is why some of you are like, oh yeah, it's 15 weeks. And I'm like, no, it's 10 weeks. And other people are like, it's 11-week lag. It's all because different ones of these are driving the market at different times. Put the EU on this, okay, the European Union, and you can see perfectly this falls off the face of a cliff on the time that Bitcoin goes off the top of the bull market. There is no other indicator that I've found that is as accurate at calling that previous bull market top than these, okay? This high here, and then you get the lower high there. Remember, this has a 10-week lag on it. You would have been able to see this 10 weeks ahead. When you were sat around this time here, you would have known that this was going to continue to slide down. And if you weren't confident enough in just the EU being the one that controlled the markets, well, who else was selling off at that time? This one here, as you can see, is the Japan M2. And again, with a 10-week delay, you can see this predicts that first peak in the market perfectly. It then comes down and puts in this second lower high from this one. And you can see, again, falls off the face of a cliff. It's the Japan M2 and the EU M2 that killed the last bull market where it stood. Some people are like, oh, well, no, it's because interest rates came up. Those didn't increase until this time, okay? So it's all to do with the M2. The M2 is the daddy. The M2 runs the show here, okay? If you don't believe me, go and please just apply this for yourself. It takes less time to apply this and do a bit of backtesting than it does to think up some smart, less than smart kind of comment down below about why I don't know what I'm talking about. Now, I appreciate right now the markets are not reinforcing what I'm telling you, because I've been telling you that this signal is flashing up and you'd be like, oh, the market's going down. You don't know shit. And that's probably fair enough, okay? In good time, it will show you. And the more you can kind of understand this and build a model around this for yourself, you're going to understand that there is actually something that's driving the markets. And this is the real reason things are moving. And it's going to give you much more control to feel happier about your investments in this market. Now, certain things to pay attention to right now as we look at current day. You can see that the Japan M2 topped out around the 25th of November, and you can see that Bitcoin does carry on probably fairly in line with that. Right now, though, you can see the M2 sells off pretty hard, and that's what we're kind of seeing reflecting in the price now. What we are seeing is a failure to see a strong recovery in the Japan M2, which could, of course, cause a little concern. And if we don't see this continuing higher, then maybe I'll be a little bit cautious once we get towards June time. But as you can see, into the mid to late end of June, Japan M2 is rising from here. Whether it's this week or tomorrow or whenever doesn't necessarily show us, but the prices will be higher into June than they are now. This is the Euro M2. As you can see, it's been chopping around a lot down the bottom here. But look, eventually this has an insane rally out of here. Now you don't know, and I don't know, which individual M2 is contributing to driving the crypto prices right this second. But ultimately, all of them together will have a positive move eventually on the price, which will come in sometime through this month and into next month and beyond. This is China M2. And as you can see, from the 24th of March, this one has been surging towards the upside. Now, if you were subscribed to my channel with the notification bell turned on, you would have heard me telling you that after the 24th of March, not directly on the day of the 24th of March, we would likely see this signal flashing at some point. I did say it could take a few weeks potentially to play out. But now, obviously, everyone's quoting 24th of March. And that's the number that sticks in their head. And, you know, everyone's saying that it's inaccurate. But we are now seeing pushes higher. You can see that China M2 is one of the major drivers behind the global M2, along with the US M2. But a lot of the kind of like the moves within the market coming from the EU and Japan, as well as like the UK and a few smaller other ones as well. But what we can say is probably over the next few weeks, as we look at some of these kind of like chops and pullbacks, it would tell us that there's a very good chance that Bitcoin, when it runs back towards these highs up here, does sort of maybe go sideways for a bit. And if we do see a sell-off in the M2 up here, then I would be maybe cautious and maybe think about taking some profits up at the top here. But right now, I want to be getting into the game because markets do look very positive according to the M2, which, as we've seen and backtested, is the driver behind these markets. Let's keep going through. Who's this? This is the UK. Very steep increase in M2 here. Again, does fall off a bit. This is obviously a reaction. So we want to see tariff stuff getting eased off, maybe interest rate cuts coming in, etc. This could all help. This is the US M2, continues to rise, looking pretty strong, but this is pretty loosely correlated to what's going on in the overall markets. Now, can the markets come down lower in the coming days? Who knows, okay? Donald Trump still has various pieces of news and whatever going on, but quite clearly this manipulated game designed to crash the markets, designed to get Donald Trump what he wants, he's pretty much willing to do whatever it takes. And if he doesn't get it, then maybe we could see more mix up in the charts. I don't personally anticipate that we will see much more craziness, simply because I think we found our support up here. I think the worst of the news has come in and gone out of the way. Also, there's something else that's really interesting that I think is worth showing you. The USDT market cap, which you can see here, surging towards the upside continually, apart from this little dip, is showing that there is more money entering crypto all the time. It might not be reflected right now in Bitcoin and the altcoins, but at certain points, this money will flow into the crypto markets. Guess who the major buyers are behind the USDT? You guessed it, it's China. And as you can see, when we saw the big fall off in M2 that came on the 9th of December with the 10-week delay, not the 15-week or the 7-week or the whatever, with the 10-week delay, you can see that we see a big dip off in the USDT market cap. This shows you that China is pretty much responsible for driving a lot of the volume into the crypto markets right now, despite the fact that it's banned. Wealthy people in China are doing it across OTC desks in Hong Kong, etc. You can see this continues to rise. This, I expect, to fuel further growth in the bull market as markets continue to rise. If I was to buy because I didn't buy or whatever, where would I go? Well, guys, I tell you time and time again, if you are concerned or you're worried about what's going on in the markets, and obviously this is not financial advice, but you can't really see a way in the future that we don't see Bitcoin going to higher prices. You don't see a way that Ethereum won't end up at higher prices in the future. If you were to go outside of that, then I would make sure that I was looking for assets that were quality assets, that were driving adoption, that were showing growth metrics. What better way to do that than over on DeFiLlama.com? You can simply go through and see coins that are actually growing in terms of their total value locked. Coins that are actually showing like volumes. This is Sui, for example. If you look at Aptos, pretty similar thing, good TVL growth. If you look at the volumes, not bad. If you look at Sonic, again, similar things going on. And these are coins that I am personally holding. I'm not personally holding any Solana at the moment, but if you were to look at the volumes and things, still got some decent volume starting to return on Solana. Go and look at the Base chain. There's some great projects on Base that I'm not really holding that are also seeing some pretty good growth. Aerodrome Finance. This is not necessarily reflected right now in the price, but it will be as soon as the market returns to strength. Okay, so go and find projects that are actually showing growth, adoption, strength, and you can't really go too far wrong because they're much less risky than perhaps aping into sort of smaller cap coins that are more on the speculative end of things. Now, if you want to understand more about the M2 stuff that I've talked about, I made this thread here the other day, which I reckon is really important to understanding what is really going on behind the markets and why they're driving. So go and give me a follow, Peter_THOC over on Twitter. Also, if you want to go and pick up any altcoins while they're still on discount, because I don't think they're going to be for much longer, then make sure you sign up for either a Bitunix account or a WEEX account, or both, because they both come with huge bonuses if you use my link. They also don't require KYC, and they have some of the lowest fees across crypto, not to mention the fact that they have some of the biggest number of different smaller cap, mid cap altcoins available, as well as all the big dogs as well. So go and sign up for those two accounts while you're at it to get your bonuses. Also, give me a follow on Twitter. Make sure you subscribe to the House of Crypto. I hope you enjoyed today's video, guys. Remember, the markets, when everyone is panicking and full of fear, give you the most opportunity. I know it's taken longer. I know it's been stressful, but eventually you're going to end up in the biggest, most juicy, exciting bull market you've ever seen. It's just not happened yet, but it will. Okay, so maintain your patience, maintain your faith, keep your hustle up, and I'll see you soon. Bye-bye.